PowerEmini, trailing stop move.
2832.
PowerEmini, trailing stop move.
2831.75.
PowerEmini, trailing stop move.
2831.75.
PowerEmini, trailing stop move.
2831.75.
PowerEmini, PowerEmini, trailing stop move.
2831.25.
PowerEmini, trailing stop move.
2831.25.
PowerEmini, trailing stop move.
2831.25.
PowerEmini.
All right, good morning, folks. We're going to get started here. We're just switching over to a new broadcasting system. So this is the first dry run. So we're going to see how the broadcast gets out to everybody. All right, bear with me just a second here while we... All right, let's do a sound check. Sound check, are we good? Give me my connection on Skype. Give me a yes or no if the sound's getting out. We're going to get started here in just a minute. We're just getting the new transmission software up and running. Okay, very good. So we got a confirmation that that we're good to go. All right, so I'm Jeffrey. I'm the guy that started PowerEmini 6-7 years ago and developed all this alert software and the alert system and the algos. What we're going to do today is I want to just do a review. We got a bunch of new folks coming in, and we just upgraded to the 4.5 version, so we'll talk a little bit about that. As a matter of fact, let me go ahead and bring that over here real quick, and we'll take a peek at it. Let's just start off with this while people are filtering in. And by the way, on the show page there, you can submit your questions, and they're going to come in to my email, and I'll be able to answer them. So any questions you have, just shoot them through. At the end of my little presentation here, we'll just go through the questions and get those answered so that there's so we can kind of stay on topic. Okay, so this is the latest version of the alert software. We'll just I have a review video on the download page, but just let's talk about a few things so that we can all be on the same page. We've added some cool things, like the main thing you're going to notice is this traction meter now. So let me talk a little bit about the traction meter, because the traction meter will show you positive traction versus negative traction based on price crossing the barrier. So that's going to give you an idea of, like, you know, you're going to start seeing like the positive price movement you're getting off the barriers. All right, a lot of folks, you don't even realize the benefit of the barriers, but this is going to show you positive, negative. Now, the way this is triggered, just so you know, on the scalper, for instance, you see here's when there was 0 negative traction and there's 5.5 points of positive traction. On the scalper, it's triggered off of the first 1 minute bar close past the barrier. Okay, we got to have some kind of threshold that turns it on somewhere, and that's the first bar. That's kind of the, we'll get when we start talking about trade triggers, we'll get to that, but that's pretty much the that's our standard trigger. Is we wait for the very first 1 minute bar that closes past the barrier, and we'll throttle off of that. Now there's different ways we can take entries around that, which I'll get to at the end here. So we'll talk about trade triggers. Now on the momentum strategy, and I'll talk about the difference between the two, that's a 5 minute closing bar past the barrier. Remember, the momentum breakout is a algo that where you're trying to hang on for the big move for the whole day. So we key off of a 5-minute bar there. All right, so I just wanted to mention that that's how that works. Don't get confused. So if it's an S, the threshold is a 1-minute close past the barrier to turn on the traction meter. And if it's an M, it's going to be a 5-minute bar close past the barrier to turn on the traction meter. Okay? Now, again, the traction meter doesn't represent anybody's trades or realized gains or anything like that. It can't. All it's doing is saying, here's what after that threshold is met, the 1 minute or the 5-minute bar, here's what we're experiencing with positive, negative traction. It's just pure numbers. Okay? The goal is hopefully, you can carve out some of that. If you've got plus 13.5 points, hopefully you maybe caught half of that, right? So you want to keep an eye on that. Now, other new stuff. You've probably noticed the notes. You can click on that button and pop the notes open. And remember, folks, you can always drag the software around, kind of resize it. Okay, and you got your different colors up here. The settings screen is where you go and turn your symbols and page tabs on and off. Okay, now as I mentioned in the other video, yes, you can turn them all on, but if you're doing that, then you're going to be driven crazy and get lots of audio and lots of stuff popping to the top. And so here's a tip for you. If you're going to be primarily trading one of the page tabs, then you can have some of the other ones open, but go into those other page tabs and make sure that send top is off and you can turn the audio off, right? If you do that, then your main channel that you're kind of watching, you'll be getting all the signals through there, but the other ones won't be popping up and driving you crazy, right? The idea is that if you were watching two different strategies or two different symbols, you could have send to top, and the send to top, what that does is when a final alert goes through, it will pop it to the top so that it brings it to the forefront and you get the audio alert. Okay, so as I mentioned, you got a little bit of customization here that you can do and turn things on and off, and but don't overdo it. The concept is not to try to trade all of these. Pick the symbol. There's folks that come in and they're like I said, diehard oil traders, right? They're going to focus on the CL. You could focus on one strategy with the scalper ES and the NQ momentum, right? You can mix and match like that. So anyway, that's advice about that. Again, I'm going to have the tutorial button. When you click on that, I'm going to be working on the back-end documentation this weekend. Yeah, this was a big upgrade, folks. Worked on this for several months, all the programming, testing, and all that kind of stuff. By the way, we're still working out a few kinks. There's a couple things which I'll mention a couple things, but I don't want to get into too many details because I'm going to basically be working on this stuff, and by next week we'll have some of this solved. But the first thing is I'm going to mention is take the stuff over on the right, the momentum meter and the trend direction, kind of with a grain of salt, because you might see some weird behavior in there. Your main things that you want to watch are your range high and your range low, and then whatever the main alert is here. That for the most part is locked down and solid. Now I noticed we had a couple. It looks like today with the YM and like the other day with the, today with the NQ and the other day with the YM, we had some missed alerts. Like in other words, price passed the barrier, but we didn't get the alert. So I'm working on that. Not a big deal. That's just something I got to figure out in the back end. All right. So anyway, I hope you enjoyed the new software. The other thing that you'll see is you got the opening price level here, and That's always a good number, a good level to keep an eye on, because that gives us an idea of instantly when we put what price is doing in reference to the open, we can always get a pretty good idea of what kind of day we're having, right? So to give you an example, if price takes off above the opening price level in the morning, and you know keeps going higher and higher away from that opening price level, we know we've got an uptrending day, right? We're moving off the open, vice versa if we're trading below. So we're primarily, you'd want to focus on trades in that direction, okay? Now, again, we get the V reversal days where the market can go up in the morning and then to do a big V reversal and come straight back down later in the day. So you have a big up move and then a big turnaround and short, right? But for the most part, keep an eye on that opening price level. That's a really good gauge to work off of. That is one of our critical points of reference every day that we can guarantee every day we're going to have an opening price level, and that's going to be like a balance point that price moves off of. Okay, so that's the new software. If you have any problems with the upgrade, make sure you get to us, and we can get you set up. Okay, now let's get back to some basic stuff here. And let me just review a couple things, and then we're going to get into some detailed stuff. And this is good for new folks here. Any of you folks that are just coming in or been here for a few weeks, this is a good time to, you've seen how the alerts go through. Now you got the new version, and now we're going to do some real good isolation training over the next couple of weeks and focus on some stuff that you really want to stay focused on. So, but from a starting standpoint, let's talk about how you want to come into this.
Power E-mini, trade alert, short.
73.45.
All right, I turned that sound off. Okay, very good. So let's talk about like your three-part plan for success. And I'm gonna share this like learning curve with you. And if you follow this, I really think you can make this work for you. And a lot of the folks that come in and drop out early, they don't spend enough time to know what they got in their hands. All right. So let's talk about that now. So my first recommendation is if you come in, and even if you've been around for a while, you can go back and do this. Come in, spend maybe your first week and just watch the levels. In other words, plot the lines, drag the lines around, or if you've got the Ninja 7 indicator, you can plot that and watch that. But don't do anything. I mean, don't try to trade them. Don't play with your ATM strategies. Just watch and try to see what the market's doing. And if you're going to follow the new M1 channel, the Trade Along with Jeffrey on Tuesday, Wednesday, Thursday, which I'll talk about in a little bit, see what I'm saying about the market. And watch the levels, all right? Because your first goal is to convince yourself that these levels are unique and very high. They give us high probability movement, all right? So one of the problems I've seen is people get right away, they're right into all the nitty-gritty of the trade configurations and moving the stop and target, all that stuff right away, and they get befuddled if there's some complexities or if we get some choppy market behavior, whatever, and then they basically give up. When if you would have just watched for a couple days or a week, you would have seen, oh yeah, all right, we do get like really, really good moves off of these levels. And I now see that sometimes it's a little rough and sometimes it's smooth as butter, right? So observing like that is your first big step, okay? Take your time, observe, convince yourself, right? Once you're convinced, once you realize, hey, I've seen it. I've seen what price does. I've seen how we had a breakout. We had maybe like 3 ticks of negative traction, and then we got 10 points of positive traction, right? It's a no-brainer. right? That was obviously a unique level where price busted the move. So once you see that over and over, you can convince yourself. Now you go in having that firmly in your psyche that you know that these alert levels are meaningful. Now you go in and start working with your sim configurations and to get the mechanics down. And this is where you're going to do a couple things. Yeah, you're going to get the mechanics of setting up the configurations and the trailing stops and your targets and all that. And you're also going to kind of evaluate what kind of style that you want to work with. All right. And I'm going to recommend a couple things for new folks here today as we get down towards the bottom. I'll talk about those. But that's where you can kind of get a feel. So if you spent your first week just watching, right, really watching and maybe taking some notes on the levels and this and that, and really get an idea, maybe even jotting down on paper like what did you observe was the negative versus the positive traction. That's it, right? That's your homework. Then you do that for a week. Then your following 3 weeks is sim trade, where you track your results. Okay, I know I've promised this before, but the excuse I have is this big upgrade like soaked up all my time. I have a great little tracking spreadsheet. I'm going to really try to get that up this weekend for download when I put up some new documentation. So if you don't have a tracking spreadsheet, hold off. I'm going to put one up this weekend. You track your results. Now, the first part is where you convince yourself that the levels actually work and are meaningful. And the second part is where you're trying to get the mechanics down and kind of get a feel for how you want to start off. And you track your results. And then you're going to go off of your results. You're going to try to trade exactly how you would trade live and track your results. So if your results aren't that great, don't go live right away. You gotta perform before you can trade live. If you do have positive results for 3 weeks, dip your toes in the water. When you go to live trade, it doesn't mean you just have to flip a switch on Monday morning and then you're locked in and that's it, live trade from every point. No, get in, dip your toes in the water. Maybe your first week, trade on sim on Monday, and then Tuesday take one live trade, that's it. Wednesday, take one live trade, that's it. Just kind of throttle yourself in ever so gracefully. All right. And then a big thing is trade off of risk capital. Make sure you go watch my video on trading off of risk capital. That is one of the keys to making this whole thing work, is do not trade off of your original account capital. Do not trade off your original account capital. You got to watch that video. I explain the whole process. Okay. Now, if you do these 3 steps, you're going to be able to make this work for you. Okay. The levels that get generated, they're valid levels. We get high probability movement in our favor. I'll talk about the probabilities as we go down a little bit. All right, so what we're trying to do here to get the edge, see, the futures market, the stock market, all the markets are basically just a big casino, electronic casino, right? And the difference is we can use systematic principles and systematic, algos and systems and technology like that to skew the odds in our favor, right? And you go into a casino in Vegas, they already got the odds skewed in their favor, and you can't go in there with like your laptop and sit down at the blackjack table and run a blackjack system to beat their system. You can't do that, right? They'll kick you out in the street. But with our electronic casino, we get to do that. And so that's what the alert software is all about. It's giving us our first step, which is the entries, and we're trying to fine-tune the entries. So building this edge is all about like 3 things: the precision entries, where we're going to be putting our stops and how we're trailing the stops, right? And then our targeting. And there's always a mixture of those, and they kind of morph, right? I mean, we can we can have one configuration that has a certain hard stop, and then it just goes for a 1 point target, and that's the whole trade. It's that simple. Or we can have multi-tiered trades that you get in. You have an initial stop, you've got your first target, maybe a second target, and then you let the trailing stop take you out in the third target, right? That's a way to hedge your position over lots of possibilities, right? You hit some of your original targets, you're grabbing that, the bird in the hand is worth a, two in the bush type of thing. You're grabbing a profit, and then you can also trail on the other half of the position, right? Open it up. So the mix of these three things, our entry points, our stops, and our targeting, and how we mix those, that is what helps us create this edge. And like I said, our first edge are the precision entry areas. Okay, past the barriers. Right away, we got increased probabilities of 5 to 8 to 10 times. The average is we average about 5 times probabilities of forward traction over negative traction past the barriers. Okay, you could just kind of keep that in your head. All right, now the other thing is that we're always going to have these 4 types of outcomes on our trades. We're going to have our full stop outs, right? We get in and it could be news, it could be just a really super erratic market. We get in and we don't hardly get any forward motion whatsoever, and we just come back and snap back and hit our full stop. Okay, you're going to see those. Now, if you trade in a very agile way and you're kind of reactive to the market, you can keep these full stop outs down to a minimum. They don't have to happen that much. The other trade outcome is a draw. This is where we basically we could get enough motion. If we're just trading one contract, we could get enough forward motion where we, like, just even following the system stop, it brings us up to our entry level, right? So if we come back and hit that, then we get knocked out. The other is where if you're splitting your position, you're going for the delta neutral target. If you're new, I talk about that all over the place. It's in the videos, and there's plenty of documentation on that. But the delta target is where you'd go for 3 ticks maybe, or a point, and you cut the position in half, and then you bring your stop up equal distance. So you're still trying to maintain wiggle room, right? Because if, let's say, price moves a point in your favor and you take a point off, and then you bring a 2-point stop and you cut it down to a 1-point stop, you still got 2 points of wiggle room at that, right at that point, right? But you're break even. So we could get that scenario, and then that's where you get knocked out and you not lose anything. Now, you're going to have trades where you hit the first target, and that could be one of 2 things. Either you're going for the quickie 1-pointer, right, scalp, and you nab it, boom. Or you are in a trade where maybe it's running, and then it fizzles, but the trailing stop helps you nab a point or 1.5 or whatever, right? You just follow the system stop, and you got taken out with something. So those are going to be your smaller gains. Then there's runners. Now, the runners are kind of the ace in the hole. If you can pick off a runner or 2 per week, it can really shift your, how things pencil out for you at the end of the week. So I'm always advising folks, you got to open up for runners at least a little bit, right? If you want to be a super scalper, be a super scalper 90% of the time, but if there's a hot market and it really looks like we're trending, open it up a little bit, let things go. It was yesterday or the day before, we had 30-point in the ES momentum, which is basically you try to get a position and you just hold into the close. You don't do anything but hold, right? And you can trail the stop a little bit with the system stop, or you can just get it to a break-even point and just leave it alone. And if you just held, you had a 30-point gain at the close. That's NQ is even greater. So those are easy runners. Those are off the momentum system. Get in, get to break even, leave your hands off the keyboard, and then at the end of the session, you're just exiting. All right. Now a runner is a mini runner is like 4 or 5 points, and then 8 and 10 points. Those are kind of decent ones, and then we get runners, all the way out, 15, 18, 20 points. So this is our mix of trades. Now, so one of the reasons I went over this is just to expect that your whole challenge is that you're trying to steer the majority of your trades to these down at the bottom, obviously. You're trying to avoid the full stop outs as much as possible. And, we'd like a higher ratio of winners over draws, and we'd like more draws than stop outs. If you can maintain that ratio, you got a winning system. You're making positive points. All right. Now, before I leave this slide, one other thing to mention is this. One of the reasons it's important to kind of open things up once in a while is because you can get trapped into where you're limiting your gains, but you're leaving your losses open up, right? So you're taking 2-point stop outs, but then you're only always going for 1 point. Now, if you're like a super scalper and you're lining stuff up just right, and you have a real high win ratio, you can still make that work. But you can see the challenge, right? You're taking twice as much of a loss as you are again. So again, go back to don't always limit your targets. Learn to open some stuff up, right? Runners can be thought of as, clean up on aisle 7. You could have a couple kind of mediocre days, and you're maybe cruising around break even on the points, and all of a sudden catch a huge runner on Wednesday. You pay all your commissions, you clean up your stops, and you make some positive points. See, so anyway, that's enough said about that. Now the other thing we want to be aware of, and this is our catch-22, everything in the market and in trading is a double-edged sword, right? Trading at the open. Trading at the open can be extra tricky, extra erratic, and stops can get hit, right? On the other hand, we get days that move right off the open. Okay, in fact, this week we've had 3 of the days this week we just rose right off the open, like immediately in the mornings, right as the market opened. So we have a dilemma. The dilemma is, if you pick one of these arbitrary numbers, like you're going to wait 10 minutes, or you're going to wait 20 minutes, or you're going to wait 30 minutes, or you're going to wait for the first hour, yeah, you can crunch, you can filter out some of that early morning noise, and then maybe save yourself a couple stop outs. However, you're going to also miss those days where it really take off right at the open. So the way to deal with this is you can take entries, a minute, 2 minutes right after the open, no problem. But the main rule is don't overtrade the open. So there's no excuse for getting there and like taking 7 losses in the first 10 minutes. That's just nuts, okay? And people do stuff like that. We had a very erratic day maybe a month, 6 weeks ago, and literally where price shot to the upside, shot to the downside, shot to the upside, shot to the downside, shot back to the upside, all in the first 5, 6, 7 minutes. And we got penetrations on the ranges, and then alerts went off. And when I went back and researched that, there wasn't even any 1-minute triggers, right, that you would have taken a trade. But we've had folks that will just jump into trades like that and take big losses in the first 10 minutes. like it's a pinball machine. So play the open, but play it not too aggressively. All right, take your, roll the dice once, and if you get knocked out, hold off. Okay. The NQ is a good one for taking off really quick right at the open. If you wait around too long, you can miss like a big move. Okay, so that's the advice about the open. The open is just extra erratic sometimes because of the built-up order flow that hits the market right at the open. And okay, now let's talk a little bit about trading psychology. This is one of those topics I don't like to get into it too much because we don't need to psychoanalyze ourselves and keep diaries about our feelings and all that kind of stuff and read 300-page books about, psychoanalysis and hypnosis. None of that stuff. Psychology has to do with maintaining like a confident attitude in the trading approach so that you stick to the plan. What happens is a lot of traders, they sabotage themselves because they can get in, and remember, we're dealing with the emotions, fear and greed, right? We want to make lots of cash, but we get freaked out and scared too because we don't want to lose. So the biggest thing with psychology is all about being able to maintain a focus on the trading process. You'll hear me say this all the time. This is nothing more than being able to play the series with odds that are in your favor, built-in odds in your favor, and you will win over the series because even drawdowns will self-correct, right? But you have to continue to push through the series of trades. So the minute that you do a bunch of make a bunch of errors and whatnot that cause you to start taking big losses, the fear kicks in, you want to stop, right? You get gun shy to continue. So let's just talk about some of the basics with psychology. Remember that if you're a super scalper, you're going for like a point, okay? So your psychology can be like, hey, I'm not asking for a lot. All I need is a quick point, and that's relatively that should be relatively easy to capture, so I can relax, right? Or if you're going to go for the delta targets where you cut in half, realize that, and that's one of the reasons we do it, it's just a psychological thing. When you can just get a quick 3 ticks, cut your position in half, bring your stop up, you immediately can relax a little bit. You've got some built-in wiggle room, and you are at or around a break-even level, and now you can relax and let the trade, develop without fear, right? Without too much fear. So that's what that's about. Max drawdown prevents overtrading. What that means is, we have the 3 strikes you're out, which I'll have a slide here in a minute to show you that. Knowing that even if you screw up as bad as you can, there's a limit, and it's an acceptable limit, right? 3 strikes and you're done. And those kinds of days can and do happen. They should be rare, but the whole idea is to prevent you from continuing to lose more. Think of well, let me talk about that when we get to the slide. Catching runners cleans up stops and commissions. In your mind, just knowing like, hey, this week I'm going to have a quota where I try to catch a runner or 2, and that's going to, even if I'm having kind of a crappy week this week, that can help clean it up. So the more you play in the market, the more positions you trade. Or I shouldn't say it that way. I should say, as you're trading your normal, taking your normal trades through the series, and you're going to open it up a little bit, you have odds that you will be able to catch those runners you're looking for. All right? The market serves up nice runners for us, many times during the week. It's just a matter of opening yourself up to the possibility. Okay, so then the other thing that you got to learn, and this is again when you observe for the first week and then you track on sim, if you follow the system signals with correct money management, you will win over the series, which means at the end the built-in probabilities you'll have positive traction. Now this statement here, with correct money management, that's not like a trick thing or anything. That basically means, correct money management is if you get an alert and price crosses the alert and you take an entry and then price goes 4 points in your favor, you wouldn't turn around and watch the price come all the way back down and back crush your entry and then take a 2-point stop, right? That's what I mean by correct money management. There's people that trade like that or have, that there's strategies that are like that, all or nothing type strategies. So the point being is, yeah, of course, if you've got a 4-point gain, you would either be at least at break even or have some kind of locked in gain. If you're following the system trailing stop, you're definitely going to have some kind of locked in gain of a point or two. That's what I mean by correct money management. Okay, and that's what psychology is about. Convincing yourself with enough exposure and then understanding how these couple little things interplay to put those probabilities in your favor, right? That gives you the psychology. Okay, max drawdown. Max drawdown, I came up with the 3 strikes you're out rule just because it's like baseball. You get 3 swings, okay, and you don't have to go all 3, but this will be the max. And the reason why is this. Think of it this way. Sure, you could go, well, yeah, but what if the 4th trade makes it all back up, right? What if the 5th trade makes it all back? What if the 6th trade? You could keep doing that, but here's the reason why we want to stick to a max drawdown. Trades work half because of the levels that are getting generated by the system, right? The high precision breakout levels, right? They work half because of that and half because of the market activity. A good, hot, active market working along with this system is what gives us the most bang for our buck. That's where we get the big impulse moves off the breakout levels. So just think of it in reverse. If we have 3 stop outs, that's really just reflective of, hey, we just got bad energy in the market today, and chances are it's not going to get any better, right? As long as you didn't take like 3 trades in the first 10 minutes, because the market could smooth out like an hour later and then start to trend. But if you've taken 3 trades like over a couple hours during the session, you kind of paced yourself out, and nothing works, that is not reflective of the system. That's reflective of just a dull market. It ain't happening. When we get these really nice moves and trades off the barriers, that's because we've got a hot, active market. And so that's just it's a feedback loop that says, hey, if you get 3 stop outs, you're just probably playing a crappy market. It's either too dull and there's no follow through, or it's way too erratic. The ATRs are off the charts, right? There's the volume, we could have 10,000 volume a minute on the ES and 10-point ranges on a 1-minute bar, right? You're going to get sliced and diced, potentially. Anyway, so that's about that. Now, the reason I'm stressing this is because many traders' demise is that they don't stop at 3 trades, right? You get turned into a revenge trader. So think of it this way. If you come in and your first trade is a stop out, come in, take another trade. Now you've got probabilities that the second trade can make up for the first trade. Now if that doesn't work, or you can stop that again or maybe break even, your third trade, you've got a chance that you can make up the loss of the first 2, right? So you're taking 3 swings, and if you still can't make it, then the market was just not your friend that day. It didn't want to be your friend that day. Okay, so definitely follow this max drawdown limit when you're in live trade. Now, when you're in sim and you're tracking your results, then yeah, obviously if you took 3 stop outs, that's your official tracked results for the day. But then, of course, you could continue sim trading, just don't track that stuff. Okay, let's talk about the basic trade entries. Again, we have a catch-22, double-edged sword, damned if you do, damned if you don't type of thing here. So keep that in mind. When we get a trade barrier, that is our line in the sand. That's what we call like a trade trigger line. And let's talk about the scalper or the M1 channel that I'm running right now. Those those are like high octane type of alerts, scalp type alerts. So we've got 2 ways we can trigger into a trade. One is the very first 1 tick move past the barrier can be a trigger, right? So like if we got a trade barrier and you just place a buy stop limit order 1 tick above, you can like sit back and the trade's just going to fill itself, right? Now, in a hot active market, these work great, right? You're triggered in, price takes off, it never looks back. Smooth as butter. In an erratic market, you can get hooked into little false price spikes and then nothing happens, right? So our challenge here is that this is a viable way to take entries, but it obviously performs much better in like hot active trending markets. So this is where you got to gauge a little bit, like, hey, do we have a super flaky market today, or are we like rocking and rolling? And then you decide if you want to use this type of an entry. So this is our most bleeding edge type of an entry. 1 tick past and you're in. Boom. The other method is you wait for your first 1-minute bar that closes. Now here's the thing. The close doesn't have to be past the barrier. But the first bar, when your first 1-minute bar closes where the range has passed the barrier, now it could be 1 tick move pass, it could be a 2 tick move pass, it could be a 3 tick move pass. But that outer range of that bar now becomes your secondary trigger line. Now you would, on your first 1 tick move past that secondary line, that's where you take your entry. Okay? I recommend that in dull and choppy types of non-trending markets because it can keep you out of some stinkers. Now, here's the thing. If you're trading size, you can hedge your bets. You can go in on half with the 1 tick trigger move and then do your add-on the other half on the secondary confirmation, right? So, unfortunately, there is a limited level of complexity to trading. I can't make it super simple, and then otherwise it makes it inflexible. So these are our different ways we can take entries. Maybe in the morning, your first couple trades, you want to be extra skeptical. If the market's proving that it's a hot market and things are on the move, and the price is moving away from the opening price level, and we're obviously trending, and we're getting good traction off of the barriers, you can start trusting maybe that 1 tick trigger move. All right. Anyway, those are the ways you can experiment with your trade triggers. And definitely when you start trading size, and even when I say size, I'm talking about just even 2 contracts, that's size, right? 1 contract could trigger in on the 1 tick move, and the second could trigger in on the second move, right? It's a little bit more complex, but you're hedging. Because that way if you get yanked into a false move, you're only yanked in on half the size, you take half the loss. Get it? Okay. Now, final slide for today, and then we'll get to the some questions. Now, in the big upgrade in 4.5, what we did is, in the previous version, we had kind of just kind of configured so that we could work off some channels. Hang on, so we're getting a screen flicker here. All right, looks like we're back. Okay, so in the new version, the way it works is the M1 channel, and the M you can just think of as like manual. The M1 channel is an open channel on my end, which means I can send whatever I want through there. All your other channels, the ESS, the ES-M, your NQ, your YM, the CL, all those channels, those are hooked up to specific algos, right? And basically we have the two algos. Let me just go through real quick again and talk about that. When you come in here and clicking on the settings button, you got your scalper mode and your momentum breakout. Now just keep in mind what these are, okay? They're different types of approaches. They're both valid, they're just different types of approaches. Your scalper is designed to get you into the impulse moves. It's looking for whatever impulse move that can make you points, whether it's to the upside, to the downside. It's very adaptive. So you could get, the trend could be up for the day, but you could get a short alert on a down move in an uptrend, right? Because it's very adaptive. That's your power scalper. These also can turn into big moves because the scalping alerts a lot of time line up with the big cycles of the day, right? And then they end up delivering big. So the scalper's got its own trailing stop, and so sometime when we get hooked into a good scalp entry and we're catching a nice wave in the market and it's a nice fluid follow through, our trailing stop can yank in, you know, runners even off the scalper. The momentum breakout is designed to play the overall direction of the market for the day. And the concept is your goal is to try to hold something into the close. Now, you're not going to be able to do that every day. Some days you'll get stopped out. Some days the market will make a nice move, but you know, if you're following the trailing stop or have a break-even stop, it ends up coming back and knocking you out. And then other days, we get big long-range accumulation up days or accumulation down days, and that's where you can catch, you know, 25 points, 30 points with the ES. All right? Nothing more than you get in the position and you try to stay in to the close. Right? You're closing those positions out like literally 15 minutes before the close. That's the difference. Now, let's say that you were looking at just the ES scalper and the ES momentum. That's fine because there's going to be days where they're both lining up and going long, and you'd have maybe different levels to play. But you could see an example where your momentum breakout is trying to keep you in long for the whole day, right? Because the market's in a general uptrend for the day. However, the scalper has you shorting because the market maybe got overbought and now it's turning back, right? So you'd have a conflict there because you're dealing with the same symbol. Just keep that in mind. That's how that works. So with the M1 channel, which is turned off right now, the M1 channel comes on Tuesday, Wednesday, and Thursday, first 3 hours of the session. I am trading right in there with you, and I'm sending out market commentary and also trade commentary. What's going on? Okay. Now, I just wanted to, we just started this, and so we're just kind of, like, again, we're kind of just dipping our toe in the water. We're trying to get things jump started here. These were the alerts that went out this week, okay? Decent. Uh, we're gonna see some much better stuff coming down the pike, but decent. And I'll show you what I'm talking about. Here is the negative traction on the left. Here's the positive traction. Now this is just these are not realized gains or anything. These are just what price did after the alert went out, based on a 1 minute close past the barrier. All right. And what I want you to notice here is we take 1.5 points, 6 ticks, 1, 2, 3, 4, 5, 6. Okay. If we can get price move 6 ticks past, right, and there was an entry somewhere around at or around the barrier, you can assume that you could have captured either 1 point, or you could have got to a delta position, right? So just think of it that way. These alerts, the M1 channel, these are like real high octane type of alerts. These are based on deep pullbacks. This algo that we're running right now, and the idea here is this: for you new folks that just want to get your feet wet and follow some real precision trades, follow the M1 channel when you have a chance. Tuesday, Wednesday, Thursday. And again, you're going to see the market commentary. I'll be explaining things, and then you can see we're getting the odds in our favor. This is like 8 times. This is 8 to 1 positive traction right there is what you're seeing. Okay. Now your job is to get in there and take some of that out. One of the concepts, real important concepts, is you don't have to take more trades or trade more symbols or trade more fancy setups to make more points. You lock into a basic, high probability strategy, and then you increase size. That's how you build points. So what I want to get across here is, if you're following the M1 channel, get in there. And, when you're starting, get in and take your points. Go in and take points, 1 point targets, build up some risk capital. Then you can start to open things up. And we had kind of as you know, this week we had kind of a topsy-turvy market a little bit. One day was a decent trending day, but there you have it. Now, going forward, I'm just going to tell you, the M1 channel is going to do some pretty fancy footwork. It's going to be for super agile traders. Right now, I just have a deep pullback algo running, okay? And we're also going to be doing counter trend trades through the M1 channel. All the other channels are momentum breakouts on ranges, okay? The M1 channel is fancy footwork. It's going to be different types of entries. But again, the idea is focus on, if you can see a 1.5 point move past the barrier, we're calling that a winner. And actually, not a winner so much as a successful follow through, meaning that we're getting enough movement, you could either capture a point, or you can, get to like a delta semi, at or around break even. Okay, that's our minimum objective, is just to get that 1.5. So you can see that most of these trades hit that objective. Just one didn't this week. Okay, and then the rest is gravy. How are you able to catch that? Okay, so let's go ahead and jump into the mailbag and see what we got as far as any kind of questions that have come through. And going forward, like I said, I'm going to focus in a little bit more on some fine tuning with okay. Okay, here's one. Can you discuss when and how to take the trades with the new system? Yeah, do me a favor. If you're an ES trader, watch the M1 channel when it's running, and then you can also be watching your scalper or your other the momentum. The whole goal when getting started is not to have a catastrophe right at the beginning of live trade. So that's where if you go in and watch my risk capital video, I really cover how the whole goal is you're just trying to get the plane off the runway. You're just trying to get your account moving in the right direction in the beginning. All right, going through the questions here. Yeah, it looks like our new transmission is working pretty good. All right, I'm going through the questions here. Oh, all right, so let's talk about the trading hours and whatnot. Now, pretty soon here, the system will just be running round the clock. That doesn't mean you want to try to trade all the time. I advise you to trade during the day session, and then the night session when the European markets open is another active session to trade. Those are probably the two. Your margin requirements are going to be different. Well, it depends on your futures brokerage. Okay, I'm looking at, but for a while, we might be coming down here and there because I'm taking the system down for maintenance. Daniel, I'm getting your questions. I'm going to answer you by email. Let's see here. Okay, I guess that looks like everybody's questions. Yeah, so here's the thing. We're going to start seeing some counter trend trades with the M1 channel, as well as we're playing deep pullbacks. Deep pullbacks against the opening price line is a great way to think about it. Very effective trade triggers. We're trying to get in right on the deep pullbacks. So going forward next week, watch that M1 channel. The other thing I'll mention is I'm still doing upgrade stuff on the back end. The software itself is upgraded for all you folks, and everything looks like it's working great. I'm still working on some back end stuff and tinkering with the algos and settings and things. So you may see little hiccups here and there. Don't fret about any of that because this is kind of a work in progress. But the main thing is we've got our good alert levels. Okay? All right, folks. That's it for today. I'm going to let everybody go and have a great weekend, safe weekend. If you need any help, shoot us an email. We'll get back to you. And thanks for showing up today. This is being recorded, and I'll be editing down and put it up for future review. let's just start off with this while people are filtering in. And by the way, on the show page there, you can submit your questions, and they're going to come in to my email, and I'll be able to answer them. So any questions you have, just shoot them through. At the end of my little presentation here, we'll just go through the questions and get those answered so that there's so we can kind of stay on topic. Okay, so this is the latest version of the alert